Welcome back, guys. Today video bringing you guys something special, and you guys have been telling me that you want to see more away from the chart, so we're mixing the two together. Today I've been invited by Audi to go on the track and experience their new tire compound and some of their cars. It's a free event, they invited me over, so we're gonna go check that out, check out the track day with Audi today. So we're gonna go have a look, and then of course we're gonna talk about Wickfills. That is the main part of the video, but first let's go have a look what they have going on there, and yeah, I'll keep you guys updated. All right, guys, pulled up to the event now, got signed up and everything. We'll see how it goes, keep you updated. So yeah. I just finished up here. Nice track experience, tried the S5, as we can see. Very good, not bad. All right, guys, just finished up on track here. As you can see, everyone ripping around in the back maybe. It was good, man. You know, it's a free event. Can't always expect too much, but I'm happy that they invited, and have to say, Porsche always wins. But let's get back to the lab, and I'm going to talk to you guys about Wickfills, because that's also why you guys watching this video. Can't be a Tradesharpe video without value. But yeah, doing something different. Let me know in the comments below if you like these type of videos. Do the YouTube business, leave a subscribe and a like, you know. Let's do it, guys. Come on, you know the YouTube business. Alright, guys, so we're back in the lab and we're going to explain Wickfills here. Now, Wickfills is not too much of a complicated topic. I have a specific way to trade them, and yeah, the basis of Wickfills is going to be what we're looking at is for price to fill a wick, right? So normally when we're trading the 15-minute, 30-minute time frame, what you'll notice is that some candles get filled like this. And what you'll notice is that some candles that with long wicks like this get filled, but some end up being rejection wicks. How do you know which one are going to be filled, which one might be rejection wicks? And more importantly, what is my strategy behind understanding which candles can I take a wick fill and which candle is better just to leave and wait for something to maybe close above, or use 5-minute structure to my advantage? So the overall rule is that 85%, and we could even push that number higher, yeah, probably around 80 to 85% of the time, we want to be taking our trades at the break of high. What you'll notice is that the break of the high is the best time to take a trade. Break of high, even if we do sometimes have a longer wick, if you do a little bit of measuring, break of high is never a bad idea, right? So even if we have a smaller, longer wick like this, taking at the break of the high, your stops can still be in a good spot, and you don't have to particularly wait for a wick fill. Because what you notice here is that when the high is not broken, we normally get pullbacks, and these pullbacks can last for a while here. And this pullback could have pulled back all the way down to this area here before continuing bullish, and your trade will still be right. But we can't run a stop loss that looks something like this. It's just silly to run a stop loss. Let's say we took a trade on the flip and we're running a stop loss for 50 pip stop. Like, who wants to run a 50 pip stop? But if we broke the high, the probabilities to continue towards the upside are much higher, because essentially what we have on the candle here, and if we read candles backwards a little bit here, what we can notice is this thing right here. So when we respect the high, we have lower highs. So this makes a lower high right here, and this makes a higher low. But when we break the high, that becomes a higher high, gives us the probabilities for continuation, and we know that, okay, price has made a bottom wick, broke the high, that is our entry, and that's how we avoid drawdown. But what are the times that we can use wick fills to an advantage, and what are the times we can use to take a wick fill and expect the wick to be filled? Is going to be very, very simple, and it's going to actually leave from the 15-minute time frame. And the most times you want to be looking to take a wick fill is when we have 30-minute closures, because 30-minute closures give us more confirmation than a 15-minute closure, and especially when it respects one of our setups. So if we're looking, let's say, for buys above the range here, which is setup number 1 for all the guys who've been following the channel, you guys should know that. If not, go back and check the setup videos that I do have, that I provide for you guys on the channel. You can go ahead and check all of that out. But essentially here, right, this is setup number 1, close above the range. So we want to use a 30-minute candle because it's more confirmation than a 15. A 15-minute candle can pull back, a 15-minute candle can do what it wants to do, but a 30-minute candle, at least we have more confirmation. So 30 and 1 hour is the best time frames to look for wick fills, because they have more confirmation. Personally, I love to use the 15 because I can get more accurate entries. It's a little bit different. Watch my entry video to understand more about that, especially my time frame entry video. That's going to explain a lot more about that. But essentially, the number 1 component for a wick fill is going to be your session bias. What is the momentum in the session, and is it a volume time? So you have to be you have to make sure that you're taking the trade basically literally like 5-10 minutes before London or New York open, or literally 5-10 minutes after, because that's going to show, okay, we're in heavy volume now and I'm not going to miss the move and I could take a wick fill. Because the problem here is that if we want to hold stop somewhere here around 21 pips, we're potentially missing on a 16 pip move to fill the wick. And that's a lot to wait for 16 pips, because if we took this at the break of the high, now you're holding a 38 pip stop. So you can see there's a huge difference. That is why, and that is a scenario where we would want to use a wick fill. But in order for this wick fill to play out, we need, first of all, the 30-minute or 1 hour to close, right? That's very important. Second of all, we need one of our setups to be present. We need to be following session bias. And most of all, we need a time of volume. If there was no volume in the market here, we would have seen the wick fill fail. No volume, wick fill failed. When the volume comes back into the market, the wick is filled. Now, outside of our trading times, it is very hard to predict when volume and when volume will not come. That is why we have to stick to a consistent plan of trading right before or right at London Open, or a little bit after, 5-10 minutes I'm talking about here. I'm talking a window of 10 minutes before London Open, 10 minutes after. That is the best time where you see wick fills, or if you notice a consistent time of volume. Or we're going to be looking at the same thing in New York, 10 minutes before New York Open, or a little bit after. So that is where you're going to see the consistency, because that's something we can plan for. Random volume times during the market, unless you've seen it happening all week, then you can't use that to your advantage, right? So understand that. And that is how you're going to make sure that wicks are being filled. But remember guys, 85% of the time we're taking trades at the break of the high. I'm personally trading the 15-minute. I would have saw this pullback and I would have been able to get more of an accurate entry, probably just breaking this 15-minute high, which is my setup number 3 with the same stop loss, right? So that's setup number 3, breaking the high here, same stop loss if I was to take this trade. But it was essentially also a wick fill on the 30-minute, right? So we can go back and see another example and then wrap up the video here. I'm going to bring back the sessions and we can go back to a session and see how at sessions we get the wick filled here, right? So if we look at this, this is a beautiful example just popped out at me right here. Is this here. So green is when London session starts. So let's go ahead and look at this here. So we have a close above the range. Wick does not get filled. How many times the wick here? Wick does not get filled. We go next candle, 15-minute. Right, London Open comes, boom, we leave a wick here. Wick gets filled. Boom, because we have volume, big wick here. This is not a setup, so you wouldn't be able to take this trade because it doesn't follow the setup rules, but the concept works because this is London Open. 10 minutes after London Open, this is boom, wick gets filled, right? So that is the important concept. Now, if you add that with a setup that actually makes sense, and you also add that with probably the 30-minute close here, you can see the 30-minute wick does get filled, right? So the setup, the 30-minute close, and with the volume time, which is that London Open, that's what's going to give. But you have to make sure that this is set up. I wouldn't have taken this trade myself because it's at resistance, and that's why it would be an invalid trade for me. But the concept still works of, okay, we do see that pre-London, you can see the wick did not get filled, ended up actually pulling back all the way down, and you would have ended up holding, if you took it on the flip here, 13 pip drawdown here, instead of actually breaking the high and continue, or the wick being filled. But as soon as that London volume comes in, we see the wick being filled. So that's basically how I use wick fills here. I hope that has helped, guys. Make sure to leave a subscribe if you're new to the channel, and like the video as always. Let's get it, guys. Hopefully you found this useful. Wanted to make it clean and simple. With that being said, guys, as always, take care, trade sharp, and hopefully catch you guys very, very soon. Peace.